Hey, what's up, guys? Hope everyone is great. I'm going to talk about Bitcoin in this video. As usual, this is just my opinion, not financial advisor, right? Take everything I say as probability statements. Any move in the market has risk, and you need to take that in consideration, plus probabilities, plus the subjectivity and nuance of all the data that can be interpreted out of the market, right? So, with that said, let's get into it. So we dropped way more aggressively than I was actually expecting. So we are kind of in a little bit delicate waters, right? Because we didn't see a significant bounce. It was quite aggressive. Although I can just start by saying that I do like these rejections. So this is a massive rejection, right? So we are talking with about, if I take a look here, a rejection of around 16%, almost 20% back up, right? So this is actually good news because historically speaking, when we have rejections of this nature, very often they dictate that we are at a bottom range, right? Or a kind of a reaccumulation range. That doesn't necessarily mean that we cannot revisit a new lows, like for example here. So we have a massive week here as well, although is not as expressive as the ones that we saw here. So we have here 41 rejection here. Then we had a lot of sideways movement since then, and basically formed the bottom, right? So we have so I like what I'm seeing there. However, I still believe that we may actually revisit lows. There is a chance that can we come down into the 40k and the 35k. Yes, there is a chance for that. That's also another untapped zone. We have CME that have a serious gap around this range. Obviously, stops being run below that level would put a lot of people in panic. But overall speaking, I'm still pretty much confident that this looks more like a reaccumulation phase rather than a top at the moment. Another reason for that is, for example, if I look into the perpetual swaps, we have again the swaps trading very aggressively, similar to all the times that we have a significant bottom level. So we have one here in March 20. We have all these periods that the swaps were trading aggressively below as well. Before this massive rally, we had this local bottom here that was massive, this retracement here, this kind of retest of the lows, and now we are seeing equally the same level of aggressiveness in terms of the difference between the spot market and the perpetual swap. So here, if I actually zoom in, and by the way, this is kind of a script that you can actually get. Just type Bitcoin perpetual swaps in the script library. It should show this script there. You just need to download. And I can manage this and activate my labels here, just kind of for information. So take a look into the indicator. So here we can see the different swaps, right? So we have Binance trading very aggressively below spot as well. We have OKX as well. So I like specifically when we have Binance and OKX. That's actually give me a much more confidence that this is an ongoing accumulation. These two in particular, it basically reflects that there is a lot of short selling pressure. On the other hand, can also imply that there is strong demand coming out of the spot market. In particular, I'm using the Coinbase as a spot basis, right? So I generally prefer either the Coinbase or even the Tradingview own index are the most reliable in terms of measuring the spot difference. So this is good news because this is going to affect the funding rates, obviously. And speaking of that, if I take a look into the funding rates here, let's take a look. This is so the funding rates are now kind of finally negative. So we had this coming for a long time. We're looking to see this coming into negative territory. Obviously, during the first few hours of the dump, that was much more aggressive. Now it's kind of getting a little bit more back to the baseline, but nonetheless, it's still negative going on. And we see that the swap base is remaining that low. It will influence. We had finally a clear out of the open interest. So we have approximately around 40% drop since the local top. So since this point here to where it is at the moment, 13 billion, it's more approximately around 40% drop. So that's quite a significant drop here. So which is good news. So a drop this big in open interest it's a great deal. We are talking about $9 billion wiped out. So that is kind of good news. and that obviously open up the case for this being a possible bottom. Nonetheless, again, I re-emphasize that I think that we might still see revisit of the lows, right? Can we kind of get another leg down to revisit the 40k and specifically the 35k? Yes, I do. Although at the moment I assign a lower probability unless we do something like this, right? We bounce to test this level, the 54 4k level, and then we try to remain there, and then there is a bit of weakness showing up, and then we can see these either retest the lows once again or see a more aggressive correction. This could happen, right? Although I'm not entirely convinced about that. Nonetheless, I'm open-minded by that fact, right? I just don't feel, generally speaking, macro bearish anymore. I think that this bounce is extremely useful. The fact that we produce a lot of volume at these lows, this huge rejection, the bounce up to the 50k level is good news. But we see at the same time that the market is not seeing a strong volatility as well. So we have the whole weekend that this was basically practically sideways. So yeah, when that happens, it's still a sign that the market is still heavily controlled by market makers. And so the opportunity for people to make money in this is basically by being short volatility, because a lot of people will take this dump, then expect a lot of volatility, and what happens that people who are long volatility will get wrecked, and those who are short volatility with the options or those kind of contracts that basically track volatility can make money, while everyone else basically keep holding, or for example, getting destroyed by funding, especially if the funding is negative, like if you are short and the funding is this aggressive. Obviously is not good for short positions. But we see a bit of a flip now going there as price is now retesting highest. But we kind of need to pay attention to how this develops. Good news that futures are seem to be regaining strength. So this is a good news that for a while we had a massive downtrend in the futures, and now is breaking that trend line, especially some of them going into backwardation. So we see that they actually traded below spot levels, even below the perpetual swap. So it was a very aggressive crash that wiped out a lot of open interest in the futures market. But we see that strength in the premiums is coming back, at least on FTX. If we take a look into there a bit, it's a little bit different. We are not seeing the same kind of strength. And I would say that I probably would put more emphasis on these futures rather than the FTX. So what I want to see is really the Deribit starting showing some strength, right? Possibly now. So we definitely see that this is holding quite well. The fact that we are kind of seeing no more down pressure. It just feels that a lot of shorts got covered, so a lot of hedges got covered, but we are not seeing that huge strength yet in terms of people speculating in a directional long into the futures market. So I would like to see that, but it's good that we saw a massive flush of those orders nonetheless. So that's kind of great news. So I like this massive week nonetheless. Again, it is possible that we revisit the lows, for example, the 44. If we take a look into, and I hide this for a second, all this clutter. Let's see if I can change this. So we see, if we take a look into the monthly chart here, let me just kind of delete all this stuff. If you take a look into the monthly chart, we see that we revisit this kind of massive doji candle here. So we visit the low, and now what we want to see is really, for example, I'm going to use a different chart because it's the same, and I'm going to use this tool and map from the open till the low that we got there. So this, to me, should act as a support now, right? Hopefully, but the monthly, as kind of being telling over the last few weeks, is the fact that there's ongoing weakness in this chart. That's kind of the thing that I still don't like. What is going on? I have a neutral flag printing on a monthly. Obviously, this month is not closed yet, but it's a warning that there is some macro danger here. The fact that we may actually enter into the bear market. We don't have any confirmation yet, but at the same time, the fact that I have a neutral candle here, it just means that is a pullback. I know, technically speaking, according to the criteria that I use myself, I would consider this entering into the bear market by trading below the 34k, right? And so that would be bad. Once we trade below this doji candle or below my cloud on a monthly basis short, that would be a bad sign. But at the same time, the monthly short is always very lagging. So it's better to kind of look for the weekly from a trend perspective and only use the monthly to draw technical horizontal levels, right? Where we have the doji candle that is acting as a support, and also this doji candle that is acting as a support. So that was the first step. We pierced way below the first level that I was thinking, right? So we have the level here at 47k, but we actually end up piercing below that doji. That to me, though, looks like something that is bullish in a sense that it was a severe correction, but obviously it needs to hold above that level and then needs to regain above the this kind of the 56k. But if I take a look into, for example, the weekly chart, we still are above the green cloud, so we are still pretty much in bullish waters. And another thing that is important to note here is I have the weekly RSI. Have my signal RSI that is extremely low at the moment. So this is kind of looking set for a bounce here. We even have, for example, against that, we have a hidden bullish divergence. So we have a price a close higher than this level that we have here. So it's currently higher level than the RSI, so that's good. Even if, for example, if I use a classical RSI and we use the traditional RSI, I can also use these as a reference, and we can see clearly that there is already RSI is already printing a lower level. So this is technically called a hidden bullish divergence that is visible on a weekly. And if I go into the daily chart as well, we also have a hidden bullish divergence if I take this point here. So we have a new low while the price is still way above the previous local low where the RSI printed a lower high, right? So we have a lower low on the RSI against the previous lower high, while price printing a higher low in this case. Okay, so this is a hidden bullish divergence. We have a massive tap into the liquidity available here, a lot of stops, a lot of liquidations that we can observe here. So massive liquidations got triggered on both sides, both shorts and longs also got massively wrecked during that period. So but this is great. The fact that we are seeing this is actually good news. It basically removes some of the uncertainty. Now we need to understand as well that now we broke that kind of cloud and we are trending, right? So we also need to be cautious. It's not just that we kind of, oh, okay, we tap massively down and all of a sudden it's all good, this is the bottom. No, we need to be very pragmatic about always, right? Be careful, especially with risk management, because at the moment we have ongoing downtrend momentum. For example, if I use the daily chart here, I can deploy a trend line against, why are my, let me just change this to maybe 2, so that is a little bit more visible. All right, so we have this momentum and we can use the simple trend line against the RSI to deduct that we have new lower low. So we don't have a bullish divergence, we have a hidden bullish divergence, which implies that we can actually see this as a bottom without seeing some sort of bullish divergence, because we have a previous hidden bullish divergence. So that implies that the RSI would have to bounce from this point and then massively bounce up, or maybe printing something like this. We could see a bullish divergence here, maybe, but it doesn't need to, because we have a hidden bullish one. All right, so that means that once we break that trend line, we are breaking the downtrend momentum, creating conditions, for example, to break this market, this kind of trend line that we have from price at these levels. Well, let me just delete this here. Let me zoom in. So we have these kind of we have two bases to look for, and actually for this I'm actually using the my previous the chart, because it's a little bit more complete and already I've mapped at all the levels. So I have the trend line here, so that's kind of one reference that we can use, even using a simple RSI. Then we have this trend line that touch several price action points. So I use this as a reference. And then I have this one coming from the top as well, right? So this is kind of, I visually place them because this can be used as a reference to pinpoint places where we can decide to add a little bit to the position or not, right? So I think that is always a terrible idea to go all in into the position, but we can basically use these technical levels to, okay, I'm going to introduce this a little bit more, and if it breaks below that level once again, then I can opt to cut or reduce the risk once again, or reduce in half, whatever is the criteria. Everyone manages the risk differently. Some people even, for example, short futures, hedge in a different way, buy spot, short futures, whatever. So whatever is the strategy that you do, my videos is really not for that. It's not either for signals, but it's just really to help to critically think about these things and then use that in the future, right? Because a lot of what I'm doing here obviously is also hindsight. Although, for example, this line at the moment is relevant because it's not broken yet. So this trend line structure is relevant because we don't have a break of the momentum, right? So we know that we have a downtrend based on a trend. We have a downtrend based on momentum. So it's not, it's kind of risky to buy here. Obviously, I personally bought here. I'm very happy to buy here. I have no problem because I know that Bitcoin eventually is going up. So I like this price level, and hopefully looking to buy low. In terms of shorts, it's a little bit too late to short. Ideally, a short position would probably be around or a retest, maybe at the 52 or the 54. It depends on what happens during the week, but obviously this is a terrible place to short. This is a terrible because it's very likely that we are going to see a bounce up to the 52 or possibly the 54. So this 54 level is quite a key level, because once we start trading above that level, that bring us back into the bullish bias, but also bring us back above, especially it happens until the 15th of December, because that would bring us back into this trend line, which is based on a weekly. So that's one of the things that I kind of don't like about the weekly close, is that the weekly actually settled below this trend line. So that's kind of the thing that is basically broke the trend. So that's not a good thing. But at the same time, we now have a point. So if I use the same reference of the trend line, we see that the candle broke below this level. So this is the 51, 52K, which is also confluent with this weekly trend. So we know, or at least we can frame our market structure around this level. Once price starting trading above that level where the trend line is broken, there is a very good chance for us to return to the bull market. So that's kind of one of the ways to think about this. Doesn't mean that that's the fact that is going to happen. This is just a way to frame the market structure and then play according and distribute risk according to those rules, right? So because there is no certainties, right? The market is always there to try to beat us strongly in our own face. If you are very convinced about something, there is very likelihood that we are going to get a slap. So it's always to remain humble and be aware that the conditions of the market are always changing. All right. So that's kind of an important message that I think that is important to leave there. Anything else that the books, for example, we have at the moment the books are showing, and I'm going to use the tool here. So we have the books that actually showing significant orders at the moment. So there is a lot of demand from the 44 down to the 40K, these two range. So we have a 28 million, we have a 14 million, 24 million. So there is definitely a lot going on here. So 14, 12 million, 14 million, 21 million. So a total of 128 down to the 36K. But we can clearly see that this 43, 40, 39 has a lot of orders, and so is this 46, 45. So there's a lot of orders here still absorbing all this sell-off. So the sell-off was, make no mistake, got absorbed. Most of the exchanges are still buying strong. Coinbase is showing a lot of buy volume, and we see that the upper side, we see that the volume is actually the bidding. We have a huge cluster that is very inefficient around this range. So this means that once price decide to bounce, it's going to bounce very strongly, and it's very easy to get to the 60K very fast, and after the 60K it's very easy to get to the 69, 70K very fast as well, because we just have a minor resistance levels in between those levels. So it's more easy for price, because over the last few hours we are seeing a lot of absorption of price, and we are seeing a lot of the derivatives getting wrecked, and that could be one of the reasons that once we retest once again the lows, there is a good chance that we starting marking up, because a lot of Bitcoin is basically getting completely absorbed, and at the moment we are seeing already a massive correction of around 40% since the top. So this is a significant correction from the local top, and a lot of buying is happening here. And one of the things that we can see from that bias is exactly this rejection, right? The fact that a lot of Bitcoin got bought up. A lot of it is also a reaction from the stops, but all that is being distributed. Nonetheless, we can still come down here to revisit the lows, right? But I'm looking now, waiting for the signs to reversal of the trend, because at the moment the momentum in the trend is still not favorable. All right, only the structure is looking favorable, but not the momentum, right? So that's kind of an important distinction that is very useful to look for. And another fact, so we have also the OBV on a daily chart declining, so I want to see these also as well to change character, and we are not seeing that yet. So there is still some risk here. Obviously, buying spot here for those who believe in a long term is a useful play. However, for trading from a trading perspective, it's still very risky to take long positions here, right? Until we need more time or price action to look into that. All right, so no more time. Hope you enjoy the video. See you on the next one. Take care.